So the Federal Reserve Board staff is looking into the idea of opening access to the payment rails to non-bank technology firms, including crypto firms.
Oh, okay.
That would be a big deal,
Yeah.
because basically that's sort of the banking province, right? The payment rails.
Yeah.
So Fed Governor Christopher Waller floated the idea during a conference of payments executives that was held at the Fed board this week.
Mm,
He said he's asked the staff to look into it, quote unquote. But the idea is what he calls a skinny master account. Now, master accounts are what are needed to access the clearing and settlement services through the central bank.
okay.
Okay. And basically, master accounts are what separate federally insured, regulated financial institutions from crypto firms or non-banked fintechs.
Yeah.
So the idea is to provide basic payment services that these companies now get from federally insured financial institutions with full-fledged master accounts. Um, there would be some distinct differences between these skinny accounts and full-fledged master accounts. For example, the Fed would not pay interest on balances, and likely the balances would be capped. There also would be no so-called daylight overdraft privileges, which financial institutions can incur during the business day.
Mm,
And they also wouldn't be eligible for discount window borrowing, obviously,
of course. Right. Then
like
it's not, and they that wouldn't be their primary use case anyway. So
right, exactly. You know, this is what Waller said. He said, the upshot is that, in my view, the payments landscape, as well as the types of providers, has evolved dramatically in recent years. And accordingly, a new payments account could better reflect this reality.
mm, I like it. I mean, honestly, sounds exciting. It's
It
like, oh,
sounds like
you know,
potentially exciting. One caveat that I would throw in there is that the Fed is never quick to act.
no. This is an exciting idea for 3 years from now, but yeah.
And probably more than that, because
Right, right,
FedWire, which is a large dollar wire transfer system, currently
right,
runs like 22 hours a day, 5 days a week, but not on holidays or that are during weekdays, right?
right.
Well, back in August, the Fed proposed extending that to a 22 by 6, add
Mm,
Sundays to it, and weekday holidays. But,
right,
and here's the big but. If they adopt it, and of course it's only just been sent out for proposal, the
right,
proposal has
right.
just been sent
Right.
out
It'll
for
be a little
comment,
while, right, before they adopt it.
right? 28 or 29.
Right, right.
Yeah.
Yeah.
So, but I will also say that back, what, 20 years ago or more, when they uh did Check 21 Act,
Yep.
I thought, oh, it'll take forever for checks to be, eliminated, which was the object of the Check 21 Act. And
Right.
last year we were down to 3 billion from, like, 20 billion 20 years ago. So,
Yeah.
the Fed did act fast in that case. So,
Yeah. It's a
I might be
process.
wrong here. I might be wrong here, but I think it's going to take
Oh yeah.
a little bit of finagling. And again, it's just sort of in the investigation process, but still, I think it's very promising.
Yeah, I agree. Hmm.
So,
Good stuff.
so speaking of payment rails, RTP, which is the instant payment network operated by the clearinghouse,
Hmm.
set a new single day record earlier this month. It processed 1,808,967 transactions valued at $5.2 billion in a single day.
Wow.
Now, if you're doing the math, that works out to $2,874 average transaction.
Hmm.
The THC, the clearinghouse, which operates, it's a banking consortium that operates RTP, said that the record day was driven by a broad mix of use cases, including gig worker payouts, account to account transfers, digital wallet funding, and business to business payments. Now, speaking of B2B payments, Nacha reports that overall B2B payments across the ACH network rose 10% during Q3
Hmm.
for a combined value of $16 trillion. That's an 8.8% increase in value. And also 69% of the total value of payments sent over the ACH during the quarter.
Hmm.
Altogether, the ACH was used to move 8.8 billion payments valued at $23.2 trillion during Q3.
Man. Wow.
Yeah. You know,
ACH isn't going anywhere.
no, it's not going anywhere, anytime soon. And you and I have talked about the ACH as a
Hmm.
B2B mechanism,
Right.
Um, it has its drawbacks, but with same day ACH, it's really sort of like taken off dramatically for B2B payments.
It
And
has. Yeah.
I
Well, and
think
the other thing too that's important, I think, for people to understand about ACH is from a risk component,
right,
right? For consumer to business, it's very tricky because you basically have, I can't remember if it's 60 or 90 days, but you have a long period of time where the
90
customer,
days.
90 days, where the customer can literally just say, no, I want my money back. And the bank gives them their money back, no questions asked. And there is no dispute resolution like there is with like with
Right,
chargebacks.
right.
So, there's no, so it's very, very tricky, from that
Yeah,
perspective. But with B2B, there's only a 2-day window.
right,
And so again, the same day ACH is still really risky, but for a lot of the B2B transactions, they're okay with that 2-day waiting period. And so it's like ultimately if you wait 2 days, so if you run a transaction, and we know because we do ACH and we hold the risk on it with full
sure.
stack payments, if you pull the ACH and you hold the funds for the 2 days, there is no risk if it's B2B
Right,
because
right,
it's once you pay it out, it's like it's been 2 days, they can't go back and get their money back. So that's from a B2B perspective, ACH is going to be really hard to unseat, I think, until you have true real time, full settlement, everything
right.
taken care of in a seamless way.
Yeah, I've actually put out queries to people at RTP and the Fed, like, okay, so when are you going to make that leap, to beyond just like gig workers and account to account payments?
Right.
And you know, nobody seems to have a good fix on that. And I
Yeah.
and I think it's because the risk component. I mean, you
Hmm.
start running trillions of dollars through those networks.
Yeah.
Yeah. So and the risk is on the Fed, which means it's on the public. So
Right. And I think that that gets there's an interesting thing here, Patty, right? Because I think that the credit card processing industry, we have we kind of take risk for granted, if that
right,
if that makes sense. And I say that because it's so well defined in our industry. It's a solved problem, is the way I would put it.
right,
And
right,
so, if you're listening and you're an ISO and you probably have a no risk deal, and so your upline is managing the risk for you, or maybe you're a wholesale ISO and you've chosen to take on the risk, but you're using risk management tools that have been around forever, and so you're holding the right transactions and all that. But the risk component is huge. I mean, it's like the only real friction left in the whole system, really. I mean, you look at the card networks, and
right,
so it's like, you know, to think about RTP really taking on this risk component, it's a big deal. Like Visa and MasterCard took decades to get it right,
right.
and it's a big deal. And so I think
And they spend millions of dollars, which in the time in the 50s and the 60s and the 70s was a lot of money.
right, right, right.
Creating the network that could cushion the risk.
Exactly. Well, and yeah, and cushion it and even manage it. So in other words, it's inevitable. You're going to have fraud. You're going to have, returns. You're going to have situations that are, a problem. And they really came up with, what today we view as a bit of an archaic process. The chargeback
Right,
process is actually really annoying in my opinion, but it's like at least there is a process.
a
Like,
process.
and that was really important. Again, look at ACH. ACH has been around forever. There's no process. So,
Right.
you know, it's a little frustrating in that way, and I think RTP isn't even at the level of the ACH yet. So I think
No.
there's going to be it's going to take some time. I don't think this is one that's going to just happen overnight. This is going to take some time.
And
So,
ACH took, I mean, we,
oh,
we, we, we grow quantum leaps these days, but ACH, was first
right,
started in the 70s. So think
right,
about that, I
right,
mean,
exactly. That
and
was
now
50
they're
years
doing
ago.
trillions of dollars.
Right, right. It took 50 years.
Yeah,
So,
yeah.
yeah,
Hopefully it'll take half that time.
exactly, right. Yeah,
When you're gray and white like me,
yeah. Then
it'll be there.
that'll be
Yeah.
there. Yeah, yeah.
Well,
Uh,
speaking of risk, James, the Amazon Web Services outage
oh,
that broke out earlier this week,
tell me about it.
broke hundreds of popular apps and websites. I'm sure you had all kinds of headaches.
Shockingly, we were not impacted, which is pretty crazy. I
That's
don't
pretty crazy.
I don't know
Yeah.
how we avoided it because ISO AMP is on Amazon Web Servers. The full stack payments, we have several functions that use that. CC storage. So I have all these businesses. Stackably has AWS hosting. So like we literally have like four softwares in the building that were hosted, and somehow
Somehow
we
you,
avoided it. Well, I mean, again, to be clear, it wasn't anything we did.
right.
We
No,
just we
you
got
just
lucky.
happen to be on the right one, on the
We
right,
we were in the right
farm.
data center apparently. So
Right,
yeah,
data center, right,
yeah,
right. But and as as you just inferred, it had a lot of implications for payments. You
yes.
know, uh, for and I think most of our audience understands this, but just sort of for the newbies, one academic explained it this way: think of the domain name services as a telephone book, like the old white pages,
Hmm.
only in the cloud.
Yep.
And a TV news account out of Fresno, California that I was watching reported on folks complaining that they were late for work because the gas stations and coffee shops couldn't process their payments.
Yeah. Yeah.
I mean, there were a lot of situations like that, but
Right.
problems in the payment space could potentially be felt for weeks or months to come. Monica Eaton, founder and CEO of Chargebacks 911, told my colleagues at the Green Sheet that the outage will create a quote domino effect that ends up creating a wave of customer disputes with merchants.
Mm,
She counseled payment services teams to treat the incident not just as a technical hiccup, sorry, um, but as a potential dispute management crisis. And I
yeah.
think that that's really important. I mean, we were talking about
Hmm.
risk, and yeah, there's gonna be people that just like, oh, he's a good customer. We'll just let that transaction go through. Um,
Yeah. Yeah.
and maybe especially like these days with the like in the Washington area with all these government workers, being
Yeah.
laid off and not getting paid.
Hmm.
I mean, it's a nightmare.
Yeah.
So anyway, and then finally, I wanted to talk about mobile wallets. We haven't talked about that today, so
Sure.
it's a good time to good way to wrap up.
Yeah, sure.
Apple Pay turns 11 this year.
Oh, wow. Okay. Makes me
It
feel a little
was
bit old, actually. But okay.
Yeah, right. And while it wasn't the first mobile payment app, Google Wallet predated it by about 3 years. It did push mobile wallets into the mainstream. And today, by most accounts, Apple Pay accounts for nearly half of mobile wallet users in the US and better than half of in-store mobile transactions.
Hmm.
But as it turns 11, Apple Pay's competitors are gaining ground. This according to a new report from payments.com. Here are just like three of the top line insights from that report.
Okay.
Better than 30% of US consumers use a mobile wallet in store weekly, and that's up from 14% last year.
Wow. Okay.
Wow, isn't that amazing?
That is crazy.
That just is crazy. That just blew my mind. And the top reasons for using mobile wallets are forgetting your physical card or wallet. Duh,
I'm laughing because that literally happened to me yesterday. I got to the gas station. I thought I had my wallet and I didn't. But I was like so glad that I had Apple Pay because that particular gas station did have pay at the pump with the NFC, so I was able to do my
right?
Apple Pay at the pump. It was great.
It's funny because I remember years ago somebody saying that about that's going to be the biggest use case. People forgetting their wallets. I'm like, oh, I never forget my wallet. I can't tell you how many times I forget my wallet these days.
Right.
Uh, Following close behind, of course, are convenience, speed, and perceived security, which actually that surprised me. The perceived security.
Well, yeah,
Uh,
that's protected with your face. You can't lose your like. I mean, you're much more likely to lose your card than you are to lose your phone. So,
well, that's true, but I leave my phone home at home more than
well,
I'd
yeah,
like
well,
to as
yeah, but
well.
but but what I'm saying is, if I leave my phone somewhere and somebody picks it up, they can't do anything with it.
Right, that's true.
If
That's
I leave
true.
my card somewhere and somebody picks it up, well, they can go on a shopping spree.
Yeah, that's true. So, and then the third thing is that Google Pay, PayPal, and Block's Cash App are nipping at Apple Pay's lead with steadily increasing user um, bases.
Hmm.
So, the first to market doesn't always mean that you're gonna dominate the market, at
No.
least not forever.
Mm-mm.
But I do remember the first time, you know, when you and I first met, and I remember we did a podcast, and you had advice for agents to walk into a store and say, "Do you have Apple Pay?"
That's funny. Yeah, I do remember that actually. Yeah, that
Remember
was
that? And then
yeah,
use that as a reason to sell. And it was like
right,
that was that was a big deal, and that was probably 6 or 7 years ago, and it was a big
right.
deal at the time, you
It
know.
was. Yeah, it was. It was like at that moment where enough customers were using it that it mattered, but
Hmm.
where most small businesses still didn't accept it, you know.
Right, right. But
So
now with 30%, I mean, that just blows my mind.
that is really, really crazy. Yeah.
So, well,
Mm.
that's it for this week, James.
Awesome. Thanks so much, Patty. Always appreciate your insights here and sharing everything with us. So thank you.
Sure thing.